ABB India surges over 6% after brokerage firm UBS maintains its buy rating, raises the target price to 75.50 rupees per share from a little under 5,400 rupees, citing emerging growth drivers in the electrification and transport segments.
Gravita zooms over 10%. Now it's up close to 8.5%. On the back of positive commentary coming from Kotak, the brokerage initiates coverage with the buy call and a target price of 1,200 rupees a share as they forecast 20 to 22% revenue growth in the next 3 years.
CDSL slumps over 5% after 7.5% equity worth nearly 1,700 crore rupees changes hands. Aster DM2 slips more than 5.5% after nearly 10% equity worth about 2,100 crore rupees is traded on the exchanges.
Pratap Snacks climbs nearly 2% after the company commences commercial production at a new unit in Jammu and Kashmir. The annual capacity of snacks production at the unit would be 10,000 MT. Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangalam Malu, and we have a market that's roaring today. Reliance Industries has woken up. That stock's moved to the high point of the day. The Nifty Bank as well is participating, and the breadth of the market in favor of the number of stocks that are advancing. Well, Mangalam, it's a good-looking screen, and things really looking up this morning.
The penultimate trading session of FY24, so market looking extremely strong here. Even the mid-cap end of things, at an index level, as you could see at the top of our screens, you would say that, all the frontline indices are higher by about 0.6%. The mid-cap index is higher by just about 0.5%. Well, the broader markets, that's telling you the real story. Up around 1,400 stocks in the green for about 800 stocks in the red. Though the lines are coming closer, let's see where they go towards the end of today's trading session. A big move coming in from not only Reliance, like Nigel pointed out, but the auto space is also roaring ahead. Maruti at a fresh record high. Eicher Motors doing well. Bajaj Auto up around 1.5% as well. And add to that, we are seeing some, return of performance coming in the metals pack as well. Hindalco, for instance, has moved higher. And the power space. Torrent Power was up around 11.5% in yesterday's trading session. Towards the dying hours of trade, saw a big zoom up. And this morning itself, it's, begun its up move once again, up around 5.5%. So those are a bunch of stocks that we will keep on our radar. But it's all about individual stocks. Let's go across to Soni Patnaik of JM Financial Services for a quick technical check on the market. Soni, the frontline indices look good. The broader markets even better.
Good morning, Mangalam, Nigel. Thank you so much for having me on the show. I think rightly pointed out, the broader indices are looking quite strong. If we talk about the rollovers, this is the expiry week, and talking about the rollovers, Bank Nifty has witnessed very aggressive rollovers of 75% already. And let's just remember that today and tomorrow is still pending for Bank Nifty to show those rollovers. And most of the positions are getting rolled on the longer side. So I think heading into April series, Bank Nifty is going to be that key index to watch out for. It has underperformed the entire of March series. We have seen very high cumulative open interest, with a very range-bound movement for Bank Nifty for the entire series. So I think it's time that Bank Nifty can break out of the range. There's a resistance of 47,500, 48,000 for Bank Nifty. In any case, if it's able to break and take out those resistances, it can head towards the 50,000 mark, and that can happen mostly in April series. Any trend reversal in Bank Nifty for the downside should only be seen below closing of 46,000 levels. I think that's a very strong support to watch out for Bank Nifty. Talking about Nifty, I think Nifty is holding on to 22,000 very strongly. On a weekly basis, closing was there above 22,000. Trend reversal for Nifty can be seen above 22,200, above which it can test 22,500 plus levels, and then going forward, it can even test 23,000. So I think it will be Bank Nifty who can lead Nifty towards those high levels. So more try on Bank Nifty as now.
Okay, all right. Hi, good morning, and good to see you in. What about individual stocks? What are you looking at?
Hi, Nigel. So I think the first stock, because I pointed out Bank Nifty, the first stock would be in PNB. We've seen very good rollovers on PNB for the longer side, almost approx 70% as of now. So PNB you can buy on any small declines till 122, keeping a stop loss of 118 and target of 135 to 140. This would be a positional play for the April series. The second pick is Reliance. Of course, it's looking quite strong. It has given a fresh option chain breakout above 29.20 today. And on charts also, it's looking at a very strong breakout today. So Reliance stock keeping a stop loss of 28.40 and a target of 3,100 to 3,150 for April series.
All right, so that's about Reliance. Soni, Metropolis Health, do you have a view? Because the stock suddenly spiked to the high point, and most of the gains have accrued in just the last 10 minutes or so. So if you just look at the intraday chart, opened flat, stayed around the flattest zone itself. There was a wee bit of a dip, and from there it zoomed higher, up near that 1700 rupee per share mark.
Right, so I think 1700 could act as an intraday resistance, but if it's able to take out and close above this move, we can see on a positional basis testing 1850 as well. So I think the stock has shown a breakout on charts. It's just the option chain breakout which is yet to come. Today's important support is 1650, but there's multiple support, 1650, 1640, multiple support. One can still look into the stock. Any break above 1700, you can see on a positional basis heading towards 1800 plus.
Right, Soni, thank you so much for joining in. Wish you a happy trading day. 50,000 on the Nifty Bank is her big call for the next series itself. But let's get you some more ideas of profit coming in from our colleagues at Money Control Pro. And today we have with us Madhu Chandade, who's joining in with a stock that she's been tracking.
Sensex, the IT company from the RPG stable, had a great 2023 after the new CEO took over. However, the stock has been consolidating in recent times. The company's revenue performance has suffered due to client-specific issues in its key high-tech vertical, and in Q3, furloughs took a toll. However, a large part of it should reverse in Q4. With decent progress on order inflows and penetrating clients with complete suite of products, we expect Sensex's revenue trajectory to look up despite lingering challenges in the high-tech vertical. While margins have gained meaningfully, we expect stability going ahead. With an experienced management team in place, after the high-level churn witnessed in the last 5 years, the company is gearing up to catch up with peers in terms of growth in the coming 3 years. With valuation at a discount to mid-cap growth leaders, we see possibility of re-rating with earnings catch-up.
Thanks a lot for that, Madhu. Well, time to slip into a short break. We'll get you more on markets and stock-specific action on the other side. You stay tuned.
Welcome back. Holding well for the market. A bunch of stocks doing well. TD Power has spiked in the last few minutes. So TD Power should come up for you. In fact, it's done well in yesterday's trading session as well. This morning, it's started off with a flyer, up almost 8% as we speak. And this, is in line with the kind of moves that we're seeing in some of the other power stocks as well. Given competition on the way up, on the other side is Zentek, which is another stock which is up around 5%, was in the red for some part of today's trading session, has moved back into the green with a gain of almost 5%. So those are a bunch of stocks which are doing well. There you have it. Zentek is locked in the temporary 5% upper circuit. Gravita India is the other one, which at one point was up in double digits, still holding up in today's trading session. Kotak's initiated coverage, Nigel?
Well, that's right. Kotak has initiated coverage on Gravita, and they have a buy rating with a target price of 1,200 rupees per share. A few factors that they are considering. They're working with the revenue and PAT growth of the next few years to the tune of from 20 to around 22%, or that's for the next 3 years. They're also saying with 20% ROC and potential for multi-year compounding growth story, so they like the story. Let's tell you first about the industry dynamics that they've put up. They've given their word on the Indian lead recycling industry. They're saying it's on the verge of a rapid formalization. For the time being, though, it's dominated by unorganized players, because the unorganized players have close to around 65% of the market share. Gravita, they're relatively smaller, they have close to around 6%. But there is tremendous scope for growth because the battery waste management rules, which is BWMR 2022, that's a revolutionary policy according to them. They say it could impact the unorganized sector considerably, and that's why they are working within the coming years, the unorganized sector's market share comes down to 25% and then to around 10%. They go on to say that the company is playing a crucial role in the circular economy supply chain, and their expansion plans outside of lead, well, that's going to hold them in good stead as well. Remember, the company has said that currently 80-85% of their EBITDA comes in from lead, but in the time to come, they are working with the non-lead contribution coming in at around 25%. So we'll see how that goes. In terms of risk, they're saying that the volatility in the unhedged commodities, change in regulatory or any kind of duty structure against scrap, that's what will hurt them. And also any kind of significant investments by battery OEMs well, that's what's could hurt them. For the time being, the stock is up close to 9% on very large volumes. So thumbs up out there.
Thumbs up out there, and the stock doing extremely well, Nigel, as well. But the one which is actually thumping ahead and is the one which is leading the Nifty today has been Reliance. Surges over 2%, the top contributor on the way up to the frontline index after positive commentary coming in from Goldman Sachs. Now it's in fact extended its rally by about 0.5% odd further. It's 2.5% higher near the high point of today's trading range. What is Goldman Sachs saying about Reliance? Hormaz joins in to detail that note. Hormaz.
A pretty interesting note there from Goldman Sachs. They've maintained their buy recommendation and they have increased their price target to 3,400 from 29.25 earlier. Remember, UBS had come out with a note last week itself and they had ascribed a 3,400 rupee target as well. So it's the highest target on the street for Reliance. But the interesting bit here is that their bull case for Goldman Sachs is projecting a 54% upside for Reliance Industries by FY26, and that is coming up to a price target of 4,495. And they're saying that the consolidated returns of the company are at an inflection point. Now, they are highlighting 4 key growth drivers, and they are each of Reliance's businesses. First up, they talk about the telecom business, which they are forecasting into turning into a strong free cash flow generating business. And they expect Jio Platforms to generate $12 billion in cumulative free cash flow over FY25 to 27 compared to just under $2 billion that they generated over FY22 to 24. They come to the retail business as well. They say that the retail business is entering a phase of steady state expansion and rising return ratios, but they say that the EBITDA margins are unlikely to expand from here as the mix is shifting towards groceries. But 3 years of aggressive expansion has given Reliance the dominant lead in the offline grocery retail market. Now, the oil to chemicals business as well, there's a multi-year refining outlook. They say that the chemicals business has bottomed out. Then they're saying that the leverage over the petchem margin recovery, Reliance has leverage there because of the cost leadership and the capacity expansion that they have undertaken. And they also speak about the new energy business, where they say that the hyper integration will drive higher returns as well, as the capex may be spread across 2 phases and cash generation from the current energy business will be enough to fund the capex of the new energy business. Now, Goldman Sachs is saying that despite the run that Reliance has seen, the risk reward still remains favorable. They say that they are expecting sustained returns inflection over the next 3 years. They have a strong pipeline of catalysts going forward, and they expect the market to focus on the company's leverage, which is expected to go down going forward as well. Now, some of the key risks that they are highlighting: lower than expected refining and chemical margins, lower than expected ARPU, and a lower than expected market share and margins in the retail segment. So overall, a very positive note from Goldman Sachs. The stock is up and about, lead contributor to the Nifty upside today.
Okay, all right. Thanks a lot for that, Hormuz. Well, meanwhile, CDSL and Aster DM Healthcare, both of them under pressure post large trades that we saw earlier today. Vivek joins us to run us through an update on both those two. Vivek.
Well, that's right. Earlier today, just prior to market open, we had indicated about how, both of these stocks or both of these companies were likely to see large trades, and along expected lines, both of these companies saw the trades happen, just post market open. So CDSL, along expected lines, 7.4% of the total equity of the company changed hands via a very large trade. Now, we accessed the term sheet for this particular deal, and as per, the term sheet, Standard Chartered Bank Corporate Banking sold their entire stake via this particular block deal. Total size of the deal was close to $151 million. Now, coming to Aster DM, again, very interesting, 9.8% of the total equity changed hands via a large trade. As per the term sheet, Olympus Asia, that held close to 19% stake in the company at the end of the December quarter, has likely sold, the 9.8% equity that changed hands today. The offer size, when you're talking about the entire deal size, a little over 1,950 crores. So 2 large block deals. This point of time, both of these stocks are under pressure.
All right, those are stocks under pressure with some supply coming in. But let's talk about the markets itself and some important market opinion that has come in from our exclusive chat with market veteran Ramdev Agarwal of Motilal Oswal Financial Services. Surabhi asked him about the technology stocks and what exactly could the AI disruption mean for traditional IT players. Let's listen in.
Technology. Now, technology has lots of different ramifications. One is the traditional technology, your Infosys, TCS type of businesses. Then there is the new age internet type of companies. And I know that in your PMS, you own some of them. I think Zomato is a pretty big holding for you folks. And then there are the likes of the fintech, right, where payments and banking and technology come together, the likes of Paytm. So in this universe, what are you most bullish on?
See, the largest segment is the classical services companies. They are right now little slow after immediate burst of post-COVID.
Yeah.
There were a lot of thought process that everything will be working from distance and everything will be automated and things like that. And a lot of projects came there, and right now they're going through a little slow phase. So this is now it depends on how well you understand what is going to be the longer term future. Is the AI going to cut their number of jobs, or are they going to be new source of, apart from other sources, this is also going to be new source of businesses. That has what has happened. Layer after layer. I have seen when they started, it was more of a staffing services in between 95 to 2000. 2000 onward, then dot-com boom started. Then ERP boom started. Then all kinds of things keep coming.
Cloud happened, digital
Then
transformation
digital
happened.
transformation happened. And now AI transformation is there.
Yeah.
So all those things are still on. On top of it, AI transformation has come.
Yeah.
So I think the opportunity size is growing. Every business has to recalibrate and reconfigure and come back. I don't have any doubts that some of the companies will fall by the wayside if they're not able to change. But the ones who are able to change and go on to the mainstream of AI adoption and facilitating the companies or clients adopting more and more and exploiting AI potential, they will do very well. But maybe it is early stage.
Okay. Okay. And the internet companies, some of them
So
that you've
internet
liked.
companies, see, internet-driven, internet on the back of any business, say like all this grocery delivery or food delivery, I mean, the digital engine which has been put, or on the payment mechanism, you have digital, you have fintechs, you have online digital insurance companies, digital banks are coming. So digital is going all over. So you have to be, see, anything goes digital, and if it is successful in making money, so far the
Which
problem,
some of them have now started doing. Yeah.
so the point is that actually our broking industry is the most digital. Right from onboarding to fulfillment, everything is digital. And that's why you're doing 500 lakh crores per day turnover. And that to T plus settlement. And SEBI is promising T plus 0. You imagine nowhere in the world it is possible unless it is digital. So we are most digitized, successful digital business and growing like crazy. So clearly you have to see where exactly the positive impact of digital is there. And obviously when there is a positive effect, there are some people who are not able to adopt, and there's a negative effect. So you have to be siding with the people who are able to adopt and exploit the power of technology.
Well, time to slip into a short break. You come back, we'll continue to focus on markets and stock-specific action.
A bunch of infra stocks doing well this morning. We have Adani Ports, which continues its run from yesterday as well. An inorganic acquisition that they had done with the Gopalpuram port. The stock up around 2.5%, taking its two-day gains to closer to 5%. And the other one which is spiked right now is L&T, has gone beyond that 3,700 rupee per share mark, has also crossed that 1% mark in terms of gains, a decent heavyweight on the index as well. That's about the intraday move of L&T. But let's get to a CNBC-TV18 exclusive. Food inflation, that's been a matter of concern globally, and that's the word coming in from the outgoing Consumer Affairs Secretary Rohit Kumar Singh. Our colleague Timsi Jaipuria spoke to him and began by asking him about how he saw inflation trending, especially after the RBI recently made a statement on how inflation would be high on the government's watch list.
Inflation is something to watch, and globally food inflation has been a matter of concern. But I can say with a lot of sincerity that India has been able to manage its food inflation really well when it compares to other geographies. So how does it all work? So I think it starts with very proactive monitoring and then taking policy decisions quickly. I think in commodities, timing is the key, and our governance framework from the Interministerial Committee of Secretaries to the Committee of Secretaries headed by the Cabinet Secretary to the group of ministers headed by Honorable Home Ministers. This works in tandem and it works very fast, because you have to realize that prices of commodities, have two dimensions. One is we have to support the farmer. The other is we have to make sure that the consumer is able to get goods both in an affordable way, and they have to be available. So availability and affordability are two key paradigms on which we work. And I think by taking decisions proactively through this governance framework, we have been able to manage it fine.
When it comes to onion exports, After the ban, the exporters are not happy, farmers are unhappy in the country. We saw a lot of rage, we saw a lot of protest. Where are we? How would the government like to soothe the nerves of onion exporters?
So I want to challenge that hypothesis. I don't think farmers are unhappy. It is a segment of the trade which was, the prices in India, FOB were like $340. But in overseas markets like Bangladesh, Malaysia, Sri Lanka, they were at about $1,000. So a segment of the trade obviously wanted to make that killing, which we have prevented, because for us domestic supplies are very important, because if you let the stuff go out, then the availability in the domestic market suffers. So I don't know whether you keep track, but onion prices in retail, all India retail, we check it every day. We have not let it go beyond 30-35 rupees. So it is only possible because of the policy interventions like ban of export and other stuff, so that for the domestic consumers, the availability and affordability is ensured, which for any government, any benevolent government, is a top priority.
So 30 rupees per kg is something that the government feels is convenient pricing in retail market, and farmers are still making a...
Right. And the other thing which government has done this year, government has announced that we will be buying 5 lakh tons for the government buffer now. So it will start maybe in 15-20 days from now, when the moisture level of the onion which comes from the farm goes down, so it's dried up. So by ensuring that 5 lakh tons will be bought through NAFED and NCCF from the domestic farmer, it gives further comfort level to the farmer that any kind of crisis in terms of prices crashing will not happen. So I think these two efforts, as I said in the first question, we have to balance the interest of the farmer as well as the consumer, and I think we have been able to do it successfully.
Right, we started the show with markets in fine fettle. We're ending the show with markets in finer fettle. The mid-cap index has crossed past that 48,000 mark. The Nifty sitting with gains of almost 150 points. The Sensex hitting a 500-point mark. With this, Nigel and me, thank you on this edition of Chartbusters. Thank you for watching. Trading Hour comes up next.